Good evening. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Melt-Up Day. Another one of these days for some of these markets, especially the indices, right up through the roof. Now, not every stock's participating. You do understand that we've only got about 7, 8 stocks that have just carried some of these markets to unbelievable heights. But here we are. It is June 12th, 2023, and we're at about 6:25 p.m., giving us now the next 2 days to mull what goes on. The first thing in the morning, the big report's going to be the CPI report. Does it show that we are losing inflation, especially in the core end? You know, the headline number keeps coming down. Whatever it does, it does. It's the core that the market should be focused on. Could we get eventually the CPI under 4% in the headline? Sure. Will the market react positively? Of course it will. But what do you do when you keep the core very tight? Now, if the core lets go and starts letting go, I don't know where the stock market might go because everybody's just going to get wildly bullish. You keep hearing the high probabilities recession. We keep hearing from the same people over and over the bearish outlay in the market, how the earnings are going to be hurt, how the consumer can't spend, and yet here you are as these markets just keep moving up. So what I want to do today is I started out with something else. I wanted to go to Ford. Why? If you think about it, this latest AI thing sort of began before we heard just AI. When Ford said to Tesla, yeah, let's do a deal. Now, you know, GM had done it already, you know, everybody else now. But you can see how the market just moves straight on up. And that's pretty much what has happened in the AI stocks. Tesla itself, I think Tesla's up 12 days in a row, gained another $5 today. Imagine the wealth now there. You have other companies that are doing well. Oracle exploded to the upside today, creating what is Larry Ellison now the 4th richest man in the world, something like that. So these markets are just running. And you get to see it here, how it's moved on up. The market's got a bullish crossover happening where you're now equal numbers, the 18 and the 100. But with tomorrow, when we open, that number will cross it, just the way the math works. You have a lumbering 100-day average, and you have an 18, so you'll drop the 18th day back here, and it will jump over the 100. Then what about the resistance? Well, the market became what I call the gorilla glue trade. Once the market hit the upper Bollinger Band, it ran it every day, and it's just now starting to get under the market and not hit it. If you had one of these moves where the CPI proves to be real sticky and the market didn't like it initially, you'd probably get a reasonable size break out of this market. If you get CPI, core CPI we're talking, goes down rather dramatically and everything goes up, well, a rising tide lifts all ships, so who the heck knows where you're going to go. I think the 7:30 report tomorrow is so darn important. I don't know if it's not more important than what the Fed does because I think it's going to lock in what they do or don't do. Traders are enamored with the idea that the Fed should skip, take a good look, see how things go. Well, how did that work for Canada and Australia? Okay, not so well. What makes you think ours is going to go better at this point? You're going to get PPI also on Wednesday morning, and that'll be the last big report before we get to 1 o'clock on Wednesday and we hear from the Fed their statement. And then obviously it's a 2-part event. Then what's the Fed chair going to say? It's going to be wild. So buckle in, buckaroos. Higher highs, higher lows, under it. Now, do you have an embedded reading? So let's count here. Day 1 was today, where both numbers are over 80. I'll just count backwards. Day 2 yesterday. The day before was embedded, not the day before. So you embedded. That tells me a few things. If you lose the embedded reading with the market dropping down tomorrow, and let's assume you get a 78 reading, 77, 76, whatever it might be, the odds then favor that the market's going to make a run for this moving average right here. That would be what I would expect. Because you're embedded, will traders buy tomorrow if you get a break off the market initially? Maybe. If, when the break happens, you're still embedded. I cover that in my charting course on Bollinger Bands, learn how to do that. Then we get to Schwab. Now, I feel darn good about Schwab. I've kept this up here, and I keep saying maybe I should take it off, but it's classic what I teach. Let me explain this. If you step with me back here, the market was embedded, lost it, regained it, and the objective's the upper Bollinger Band. That doesn't mean it can't go higher than that, but from this lower Bollinger Band, the whole objective is to get up to the Bollinger Band top. It hit it, backs off a little. I don't even know if it exactly hit it there, but it's in the zone. You hit it here, and then what takes place? Market begins a correction on Thursday. Where might this market go? Well, the first thing that can happen is traders are probably buying this market because you haven't seen the red line drop under 79. Right here, which is Friday, the market's still hanging in there, but you close at the low of the day. If you're not up today, the odds favor you're going to lose the embedded reading if you don't have an update today. And if you close lower on the day, which obviously closed near the low, you could be going back to the 18-day average of closes on lost embedded. Bingo. This is exactly what I teach you in the course when you do it. Now, the trend is down. The bias is what? Well, the market did manage to close over that 18-day average. So the bias is up. You have nothing. But you've lost this whole move. And now the market's got to work itself out and figure, does it re-embed? Does it back off? Why did it back off? I can give you the reason. The smart money traders stepped away because they don't know what the Fed is going to do with interest rates. If the Fed raises them again, be it the Schwabs, be it the smaller tier banks, they're all going to probably have to raise rates that they pay depositors in some manner, hurts the bottom line. Are we out of the woods on all these regional banks? Well, you don't hear anything about them. I think that's weighing on the Fed, too. I think that a negative for the Fed is they go up another quarter point. They've just seen 3 banks fail in March. Do they want the possibility of that happening again? There's so many things at work right now that's one of the reasons that the skippers, as I'm now calling them, that's my new label, the skippers, they want to see the Fed just back off and see what happens. My fear is, without keeping your thumb on it, the inflation pops back on you. Now, the newest thing that came out today was the Fed coming out, and Powell actually said it in a speech recently, that maybe wage and inflation isn't tied together as much as we think. Well, I don't buy that for one reason. My experience in my life has been people make X amount and they spend X amount. It's really that simple. If you make a tremendous amount of money, you're a saver. But for the average person out there, they make X, they spend X. That's really pretty much how it goes. And you always hear they don't have much savings. They don't have this, that. We're talking America as a whole. We're not talking the people that are making 6-figure plus salaries, big ones, and able to put things away. They own their home free and clear. That's different. We're talking the average American. Now, I see problems there. Today, did you notice the price of an automobile? $50,000 is the average new median price of a car. Can you believe that? That's like a down payment on a home. Do you want a car or a home? By the way, most people won't even qualify for the cheap loans. They want 6.5%. So you buy a $50,000 car and you got nearly $1,000 a month payment without insurance. Wow. I'll keep my older cars. And I don't change cars very often. First of all, I don't drive that much. I think my wife and I don't drive more than 2,000 miles a year. We have 2 cars. And by the way, that's 2,000 each car, maybe. It's just no driving. Higher highs, lower lows. And I keep telling her, she goes, well, should we get a new car? I go, why? I go, we don't drive them. They're in perfect shape. Coming down a little bit. All right. Are we trending? No, but you did back off. Not every market's been going up. So gasoline coming down. Did you see the price of crude today? Down 4%. So there are problems here. Has China bought itself out? Is Venezuelan oil coming up? Is the Biden administration going to start buying for the strategic reserve? We're back to numbers we haven't seen, I think, in 2 years. So and that's basis Brent. Are they going to do anything with this? I don't know. But there's a door open here. There's a problem. And what's happened is suddenly I think OPEC Plus is going to have to cut more. Did Russia produce so much that they flooded the market and now people don't need their oil? And that means that they'll get back into compliance. Think about what I just said. It's a very real possibility. In XLF, you have a market that's got a higher highs, higher low, just starting to embed. Follow. Today, yep, both numbers over 80. Yesterday, both numbers over 80. And the day before, not. Just starting to embed. The key in this market is what does it do tomorrow? Is it able to embed? If you get a bad set of CPI, you probably don't, and you fall back towards the 18-day average. If you get a low CPI, the market will come alive, and then you open up the possibility of challenging the 100, the 200, and the upper Bollinger Band. When you come to XLI, overbought, industry coming up, but I'm not seeing that from my buddies that own industrial plants, and I have quite a few of them. And these guys, they own nice-sized companies, and they're telling me, no, industry's not chugging away the way you want. I have one friend that puts out containers, chemical containers, big steel things you see with the plastic in it. He says no, and that's a good thing because I want to know what his business does, is he's delivering these materials all over America. By the way, they have a lot of plants. And he says business is not good. And I won't name the company. It's a publicly traded company. And he said, no, it's been slipping. Nvidia, okay, so now we've got, here's the big boy. It's consolidating. Will it make it and fill any of this gap is the question. Here's what I've been telling my traders. Since you lost the embedded reading and prices normally drop back to a key moving average before making its high through the other high, I said, I don't think you'll fill this whole gap. What I think will happen is the 18-day average will march up to price as this stalls, and then you can get a break. What else happened today? I'm not that impressed. Nvidia didn't lead the parade. It was up 1.8%. There were plenty of stocks that outshined Nvidia. But I'm still looking to see if we can get down to the 18-day average. It's working off, present tense, working off an overbought condition. In stocks, well, the market lost its embedded reading, came up. Hasn't quite gotten through this high. If it does, it's a heck of a sign of strength in the marketplace, I'd say that. In the home builders, all I keep reading on article upon article is the shortage of homes. People saying, do you buy now? Do you wait a year? Do you rent? What do you do? Well, we're going to find out if you should rent or not when we see what comes out in the core CPI tomorrow. Why? Because shelter's a big part of that game, and the Fed looks at it. Our rent's dropping. Forget New York. New York rents are insanity. But the rest of the country isn't New York. Are they coming down? And we're talking, obviously, for your domicile. We know that there's problems brewing, big problems brewing in countries like San Francisco, Chicago, in the commercial real estate market. How do they get out of that? What happens? Is it a hot potato where these buildings get sold at big losses, wipe out the equity in them, let a new person come in, take them over, and repurpose the land, the building, whatever it is? I don't know. But something's going to happen. It always does. When you look at the energy sector, overbought, giving a correction. It's not a bear market. It's correcting. I kept telling you, no, I don't want you to buy the Bollinger Band. And I felt like I was leaving people out of that because going, whoa, here, I didn't catch that move, but there was no way I was going to. I knew that. I wasn't going through the OPEC meeting when the statements were made. Now we get to the gold. Well, I think gold's going to be super interesting in the next 48 hours. Does it come alive or fall apart? I happen to think if the Fed goes into a skipper program, let's skip one, and interest rates don't go up and the dollar falls from that, that's what I'm assuming, gold can come alive. If the Fed goes another 25 points higher, I know that the naysayers will say, well, that'll be the last one. You won't get it in July. They always say that, right? If that happens, though, it's still a headwind for gold because you probably won't break interest rates on that, and the dollar would stay relatively strong. We do have coming out on Thursday, European Central Bank. Then I think on Friday, if I'm right, we have the Japanese Central Bank. And next week, we have the Bank of England. So we got everybody in play right now. When we look at SLV, overbought, you hit the upper Bollinger Band. I think the smart money stepped out of the market when that happened. Copper. Over the weekend, traders, I know we're looking to see, did China do anything to spur on the economy? And I saw absolutely nothing. And it was a disappointment. And copper futures were down 3-4 cents on that because the market was expecting that maybe, just maybe, China was going to do something positive. Haven't seen it. Overbought market. Big time resistance up here at 38.54 to 56. That's the Bollinger Band 100-day average. And if you break down under here and that low, just so we can get to it, let me see if I can get you over to it. Give it a number that would be a problem. 37.07. If that's taken out, you're probably going back into the $36.50 range to try to figure out what to do next with the market. Because it's overbought, I don't think it's attracting new people. BND, you know what's going to happen here. This market's all married to whatever is going to be on the CPI and the Fed. You just might as well go to Vegas and take a bet. That's what you got. Last $1, not rallying. All of a sudden it ran out of volatility and it's gone to sleep between the 200-day and the 100 and the 18-day average of closes. It has kept its embedded reading, but it's not advancing on it. If it loses it, and if it loses it when you're under the 18-day average, you start opening your door up for wherever the lower Bollinger Band is in the market. So I'll be looking at that. FXE is the flip-flop. It ran out of upside and downside momentum. It's just sitting at the 18-day average, waiting on the report. CPI, waiting on the Fed on Wednesday, and waiting on the European Central Bank Thursday morning. So you put it together and you got reports coming out. They're going to impact everything in major fashion. How do you keep up with it all? That becomes the big question for a lot of traders, and we have it for you. We publish throughout the whole day reports upon reports on the markets you're seeing me cover here. Be it BND, TLT, we're covering all the interest rates, all the stock indices we're covering. What do we see there? We're talking, if you're a grain traders, what's going on in that market. The energies galore. We cover this in great detail, including the ethanol market. Put it all together, currency markets, the metals with it, the meat markets, you get what you want. You don't have to get all these reports. We can tailor it so you only get the ones that fit in with your ETFs or what you're covering. We'd like to give it to you for free and other offerings that we have. So how do you get it? It's simple. You go to our website at iraepstein.com and it's under free offers on the top left. You can move your cursor to the top here and you'll be able to see an icon appear. Go with that. Or call my staff tomorrow. They'll be there. They'll pick up the phone. They'll get you all set up while you're on the phone. You'll start receiving them instantly. And we probably write all together, I'll bet over 100 reports a day. We got full research staff. So you'll like what you see, and we cover everything. A lot of chart reports. Ask for the price count charts while you're at it. I'm Ira Epstein. Thanks for watching. I hope you give us a thumbs up here, and I will see you all tomorrow. Take care.